Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis, updated commodities, work our way through the dollar, yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go. And if you have any other questions or need any more help, you can check out finding-value.com. You can track to see what I'm doing during this commodity bull market. You can see how and what my opinions are on each of these sectors and individual companies that I share. You can see my buy points. You can see my portfolio and all of that stuff. We do have a discount coupon code going on. It is Mayday, Mayday, one word. If you want a 50% discount on the first month to try it out, it goes to regular pricing after. Or you want a larger discount on the yearly membership, you can always transfer to the yearly membership whenever you'd like for a cheaper discount. So let's dive in here. Let's take a look and see what is occurring today. We're starting with the DXY. I still think that this looks pretty dang strong. The reason I think that, so we've got this consolidation in this portion here, a couple of points that we contact all through here coming up. We've got a couple of contact points going down. We've broken that pattern to the upside here. We've come on up and created another consolidation on top, and we've broken that as well. So that makes me think that the dollar, the DXY, a relative strength indicator, is what I like to call it, is still very strong. That we could see further upside in the DXY. We are also sitting on top of this major long-term trend support area, that white line going across. We're on top of all that. In order for the dollar to drop and be really weak, we have to break through all that support. So that's kind of where we're at in the short term there. The 2-year yield, and yields are kind of what drive all this, in my opinion. Yields are still holding on. We've got, I put this here, it could be the pattern, it may not be. Is this a 3-hump consolidation that we're getting where we eventually break to the upside? The 2-year yield and the Federal Reserve and what they do with yields, they correlate. And the 2-year yield generally ends up front running what the Fed does. So it's the banks buying 2-year bonds before the Fed releases whatever they're going to do to the market. If we were going to get this big recession, and I'm not saying that we can't, we would see this dive bomb down. We would see it dive bomb down, and we would probably see it go towards the long-term support breakout level. So this is the long-term. I've got it drawn in there. You could probably draw it even tighter up here. So that's probably somewhere in this range there. It is possible that we drop all the way back down to here. That would indicate a recession, a pullback in yields. The Federal Reserve would loosen interest rates. They would bring them on down. And then they would, in my opinion, ignite another move higher. So that would be our retest. So we had a breakout, which occurred here. If we get the slowdown, it would come back to some level back here, which is a retest, and then we would go back up because the real estate market would most likely like lower yields. That would probably have an impact on the 10-year yield as well, which is mortgage rates. Affordability would go up, and I think we would send housing to the moon. Really would. But right now, we are in this pattern. Could this be a consolidation pattern where we break to the upside? Yes, it could. Yes, it could. We did recently break this upward channel to the downside, so we could head towards the lower end of this consolidation. And then I would be looking to see what it does after. Again, keep in mind, yields are what price the DXY. It's what prices the stock market, the NASDAQ, all of those things. Yields are some of the most important things to watch to see how the market is changing its pricing structure. And the pricing structure is determined by interest rates. So if we see this break to the upside, I would expect oil to strengthen and be the driver of that move. If we break to the downside, I would most likely expect a slowdown in the market, a softening in oil, and energy in general, and see gold and silver rip it to the upside. We can have yields and precious metals go up together, and we can have oil go up towards the end stages with yields going down as well. So I'm just giving you generalities. The 10-year yield also dropping some, but we have a long-term support level, well, somewhat long, a couple of years, that we've got support at. So we were down today, and we're coming to support underneath us at 4.15%-ish. The 30-year yield also dropping as well, but we've got that same structure across the board where we've got support underneath us towards the 4.19% level. TYX TNX ratio, we inverted, so we went lower in this. What we see is the yield curve swing back and forth given where the business cycle goes. So we swing from high to low to high to low, and we go back and forth. When this swings, there are certain investments that are preferable. For instance, precious metals are good in this circle down there. And then when we uninvert the curve, this is remember the 30 versus the 10, when we uninvert, the short end drops a little bit faster than the long end when it uninverts. That is when precious metals do very well. It's a tailwind for them. And that's kind of what I expect, but we can stay inverted. We can stay inverted for a long time. And we have not seen that breakout on yields in either direction yet. So if you see the 2-year yield break to the upside here, we are going to stay inverted or invert further. Keep that in mind. TLT, which is bond prices, we are heading a little bit higher, and that is getting above the support level. So there's that support resistance level. We're getting above that resistance level to the upside. It's making some headway. We could see a bounce in bond prices. What that means is that interest rates could drop for a period of time. And then we've got the 2 and 10, which surprisingly is inverting further. The longer end of the curve, the 10-year, is dropping more than the 2-year. The 2-year was basically flat at minus 0.02%, and the 10-year was down 0.8%. That's causing the yield curve to invert further, although the yields are dropping. So we're staying inverted, although the yields have come back a little bit. So gold, it doesn't mind that yields went down a little bit. Dollar was basically slightly higher, but we had a nice move in gold today to the upside. Now, we're chopping around here. We've got selling pressure, we've got buying pressure, selling pressure. It looks to me that we are undecided on what direction and what trend to set here in the short term. If I were to choose a trend, I would say that there are still downside force that we haven't worked completely through yet. Does it actually manifest itself to a downward move, or do we continue to go sideways, work off that selling pressure, and when the selling pressure subsides, then we can release from that selling pressure? But that's what we're going through. On a longer term, big picture view, higher, higher, higher. My view is higher. I stay long in these pullbacks or consolidations. I'm just going to stay long, guys. I'm not going to try to play the short term. It's off the table for me. Silver up 2%. Again, it's up today. We still have this downside kind of selling pressure that we've got maybe a big flag pattern that we're developing. We're just working through it. Do not get too impatient here. The big pattern is broken. Everything looks fantastic, in my opinion. I meant to hit the delete there. So we've got the big cup and handle. We've broken that to the upside. I would be ultra bullish, looking for further upside on the medium to long term. Platinum up a little bit. Looks like it's trying to put in a bottom here. It's still too early to say that the bottom is in. Some people who are really good, they get in early and they're real good at picking these bottoms. Could this be a bottom here? It could. It could. We're waiting for a big kind of bullish engulfing day to show up for me to say, yep, it's most likely a bottom. But what we're looking for is look at these lows. They're starting to come on up. We could put a low somewhere in here, and that would be good because we have higher lows coming into that resistance line that we haven't broken yet. Once we break it, all is good if you're a platinum holder. And then palladium up a little bit today. We're back to support, and we're just holding on. We're at that support level. Now, this is out of cycle. What does that mean? Some people ask me, why is it out, why is it out of cycle? Well, it goes down in inflationary periods. The other commodity bull markets, palladium went down in. They didn't go up. So if we went and looked at last commodity bull market, it started in 97, 98, which is, in this region up here is when the commodity bull market started. And we ended up in 08 down here. That is a loss. It's our metal that does well under a recovery phase of real estate. We need this. We want this. So right now, I think we're just out of phase, and we could easily consolidate sideways for a period of time. And this is also an indication of where we're at in the cycle. We're kind of pulling back already, back to support, and maybe we're here where we have to kind of bounce around a little bit, get our three hump consolidation in, and then start ripping higher again. Our other investments did this big move off the bottom, and we're consolidating sideways doing this move right now. This is where we're at, that consolidation before the next leg higher. So that's where a lot of it is at for commodities. I'm just using palladium as an example, and this is out of cycle, and I do expect this to consolidate further. XAU to gold ratio, slightly lower today. Nothing too crazy. And backing out, we've broken this downtrend line. We're at a very low level, and we've got the yield curve that's inverted. I like it down here, guys. I like it a lot. You guys know that. You're part of the website. You know that gold and silver mining companies I'm bullish on. Going over to GDX, we are up today. And we still have this kind of, I don't know if we're squeezing up in the corner there. We'll see if we get a break next trading session next week. But we're drifting right on support. So here's the support level going across. That's not a huge support level. You can draw this a little bit lower. Whenever we kind of pass through, I look at for closing points. I'd say a real strong support levels around this area here. You're looking for closing points on these weeklies. And that's probably a pretty strong area. So we could go a little bit further down, contact it, and work our way on up. I don't get too concerned with the short term unless you're getting some really strong selling pressure. I just think that this is a consolidation zone, and that will eventually break out of it and get a big run. And that goes for all these. GDXJ, we're just underneath resistance here, this horizontal resistance. And we just haven't broken out of the base yet, which we will. Fairly confident with where the yield curve's at and all of that. And then SILJ also doing a back test is what we've got here. So we've broken out of this, this consolidation region. We lined it up with the big bullish engulfing here, and then boom, popped out of it. And now we're just getting a little bit of a pullback. Crude oil down just a little bit. I think we're still in this big consolidation zone. 1, 2, 3. Now there is a possibility this dips down and goes up. Gets everybody scared. Get this big washout sale. People get their sentiment completely destroyed at the bottom when you should be buying, in my opinion, in that general area. Long-term investors, we should be highly aware of what's going on in oil. The reason is, and I'm just going on logarithmic and zooming back in here. So we have broken out of the consolidation. 1, 2, 3 hump consolidation. You've got the top line up there that we've broken out here. We are doing the consolidation return move on top of it, and then I think we're going to get a big, huge move. It's the same type of setup that we got last bull market. So this is last bull market. It started in 99, 98, just like we started in 2020. The bottom down here, oops, the bottom down there is equivalent to the bottom down here. We also have a 3 hump consolidation the end of that consolidation, the end of that consolidation. Then we broke out of the consolidation here, just like we did in this X there. And then we are working our way up. I think we're going to get a big 3-wave move, which we're in. We're in the first wave. And that first wave is where we're at. Now, I can't tell you. I think that's kind of what it looks like right there. We could be about right where we're about to break. There's a good location of a potential break there. And this could be the fractal that we're getting. It's this fractal and this fractal tied together and how it aligns right at the tip there. That is how it could be. Or maybe I have it a little bit wrong and we go and it dips down and does a retest before going up. I can't tell you exactly what this will look like. I can just tell you that we're in the general trend of a big move higher and that we're either at this like tip over here, or we still have a flush out move where we come back and tag the top there. So that's kind of how I view the oil markets. And I think that we're in a very good location right now, and we just haven't broken out yet. We're consolidating here sideways within that pattern. So TTF gas, we're down a little bit, but again, we've got a breakout return move, and we're moving off that return move here. So that looks really good to move on up, sideways to higher. We've got natural gas down just a little bit, and we're above support here. And we're down today 2.16%, but we're probably maybe just going to come back, do a retest or something like that at 2.7 MMBTU. So that's kind of where we're at. We're at a real low price, and the ratio is real low against all the other assets for natural gas. Our boy XOP, yeah, you know me, down 1.7%. You know, what's going on here? I thought, we were going to go up in oil. Why are we seeing a downward move in XOP, right? That's probably the smartest question to ask. I still think that this is a shoulder, head, shoulder. We are putting in that right shoulder. Now, if we look, a lot of this, if I were to grab this side here, this is the left shoulder. We can mirror this or flip it the other direction. So I just flipped. So this corner here is this corner here. I flipped it. And this corner there is this corner here. So one thing that we can do is we can flip it, and then this can be something that is similar to the right-hand side. So we can kind of squeeze it all together, do whatever we need to do to see what this looks like. And again, we could maybe have a little, maybe it's supposed to be something on the lines of this, and we get a move lower. Maybe it looks something like this, where we get a little bit of a move lower and then we work our way on up. It's difficult to say because now we're just trying to pinpoint exactly what it looks like. I do think we're going to go higher, very much higher, when oil breaks out of that consolidation zone. But we are getting some selling pressure here. You can see in XOP there's some selling pressure that's still residing in these past few trading sessions. The last 3 sessions, we've had some pretty strong selling pressure. Is this the slingshot that we get where we falsely break out, get people on the wrong side, and then they flip it on us and rip it? I tend to think that's the case. I'm going to remain positive on it. And the reason I'm remaining positive is because when you look at the oil markets and the physical markets, there's going to be some deficits coming. We're in the strong portion of the year, and that's when deficits kind of roll. So I'm looking for the charts to work their way back up. And a lot of the times they fake people to the downside. Conversely, someone could say, no, you're completely wrong. Recession's coming, demand's going to get hit. And I would hate to say it, but demand doesn't really get hit even during recessions. So those guys generally, I don't know if they know history that well outside of the great financial crisis and a complete shutdown of the economy. Those are really the only times we really got hit. Oil demand didn't get hit too much in the other recessions. So I don't think the recession is going to be a great financial crisis. So I think oil is going to remain resilient enough to stay above, $60-something. OIH also getting some selling pressure. We do have these ugly big red candlesticks that are sticking out like a sore thumb. So there is some selling pressure still left in XOP and OIH, and maybe there's a little bit further downside in the short term before we work our way on up. We've got Sprott Physical Uranium Trust just moving sideways, slightly higher, but it does look like we're trying to put in a little bit of a bottom, but I don't see the big green candlesticks yet, guys. So this could be a continuation pattern lower. So don't get too excited yet. We could still see a little bit of softness before moving on up. URA, a little bit of selling pressure. It doesn't look to me like we have bottomed, and it just does not look like we're going higher. To me, this looks like we're hanging on and it wants to go lower still. For URA, URNM, the same thing. Still looks like there's momentum. Downside still maybe left in this. And URNJ, again, I don't see the bounce. I don't see the big green candlestick. Still looks a little bit weak to me across the board. TAN down a little bit. Still working its way a little bit lower. I'm not really playing TAN with anything, but it is trying to bottom for the most part. It's trying to do something here, consolidate or try to bottom. We're up against some resistance there. Copper up a little bit. I'm not convinced that this is bottomed yet. Let's just wait and look for a big green candlestick, like a bullish engulfing, some sort of turning point before I make the call that it's going to be a bottom. But momentum's still down. It's trying to work that momentum off. It's got a little bit of a trying to bounce here, and we'll see what the follow through is next week. COPX down a little bit, but we're at support. There's some support through here. So we've got lithium down. This does not look that strong. I'd just be waiting. We've got support down at $36-ish. And then we've got REMX. This does not look strong at all. Looks pretty weak. Further downside for rare earth metals. Whenever you get a pattern that's facing upward like that, we could see some further downside. But we could set up maybe a really good entry point down here if we get a bottom out of this thing. SPX, I don't know how it's up here, but it still continues to truck higher. Sideways today, but still looks all right. And then NASDAQ also up a little bit, continuing to truck higher above all of this resistance. So it is making new highs. I am very surprised by this. I really am. We've got high interest rates. We've got a lot of stuff that would normally go against the S&P and the NASDAQ working its way on up. Russell 2000 down 1.61%. Not much has really changed here in my opinions. I still think we're going lower in the Russell. Up against resistance, falling out of this squeezing pattern, did a retest. Lower, lower, lower is what I would say based off the patterns. Carry down a little bit, 1.26%. Just been tracking sideways for half a year or so. Emerging markets slightly on up. This likes weaker dollar, but the dollar's been pretty strong, so it's holding emerging markets down with those increase of interest rates. They really raised rates, kind of broke to the upside, and the rates rising brought this back lower. And it's just been kind of held down by the dollar down here. XHB down 1.65%. These are the home builders. Still looks all right to me. Looks like it's just consolidating to some degree here from a move higher. Consolidating and eventually will break higher if rates continue lower, would be my guess. If rates go lower. If rates go up, we could see it pull back. MOO down 0.64%, right on support. I think this looks good. For those that are contrarian, it's right on support here. In this general region, looks good. We've got iron ore down just a little bit, and that looks like almost like a Livermore accumulation cylinder. And we're at the low end of it, so that doesn't look too bad. We've got nickel down 0.28%. Still going down a little bit in the short term here, surprisingly. But it looks like some sort of accumulation cylinder perhaps. And it's got to find some support where it's at. Aluminum down a little bit. Are we getting a weakening in all the base metals that we're seeing? Yeah, we are. It's got some support right where it's at. A little bit of a pullback here in the short term. Baltic Dry Index up massively. This still looks like it wants to go up. in my opinion. And we've had higher lows is what I'm using, and then a potential break here would be bullish. Newcastle coal down, but again, guys, we've broken the downtrend line. I'm looking for sideways to higher action with time, and that's a retest for Newcastle coal. BTC selling pressure back to support. Still looks okay. Still looks okay. We're right at support. And then Ethereum down a little bit, but that doesn't look bad. We're not just dive bombing lower. It's kind of slowly leaking sellers off. And then SMCI down a little bit, but that still looks good to go higher. It's just a small little down candlestick. And then NVIDIA, since this has been a leader, it's up today, continuing to work its way on up. And it is now a 3.24 trillion market cap. Absolutely massive, probably in a gigantic bubble. And when is it going to turn? We don't know. We'll continue to watch it, and I'll see when this thing turns. But that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. We do have a Sunday question and answer session coming up at 5 p.m. On Sunday. So if you have questions, go ahead and message me. I've written down a few questions already. And one of them, just to let you guys know, one of the questions is, what are my biggest positions? Basically, what am I the most bullish on? Some people want to see what my percent allocation is. That's difficult to do because the percent allocation moves so frequently. So I'd be in there updating it all the time. And I just kind of put in there what my overweight positions are. So I'll talk about what my biggest positions are. I'll be completely open with it. And you'll know what my biggest positions are, my top 5 or 6. And what is more important is what am I adding to now? That's the importance that I would be asking. What am I positioning in now and why? And I'll go over all that. I'll go over that this weekend. All right, guys. We'll catch you next time. This is Finding Value.